What if I told you that the same investments fighting climate change could also fund your retirement? While traditional portfolios rely on fossil fuels and unsustainable practices, a new generation of conscious investors is building wealth through companies solving the world's biggest environmental challenges. Welcome to Freedomfully, where we explore intentional retirement and sustainable investing. I'm your guide to building wealth that aligns with your values, and today, we're creating a comprehensive green portfolio designed to generate passive income while supporting positive environmental change. This isn't about sacrificing returns for values. The companies leading the transition to sustainability are often the fastest-growing, most innovative businesses in the world. From renewable energy to sustainable agriculture to clean technology, green investments are driving both environmental progress and investor returns. We'll build a complete portfolio strategy that includes dividend-paying green stocks, sustainable REITs, green bonds, and alternative investments that generate passive income while supporting the transition to a sustainable economy. By the end of this video, you'll have a roadmap for building a portfolio that not only funds your retirement, but also contributes to solving climate change, supporting sustainable communities, and creating the kind of world you want to retire into. Let's start with the foundation of any green portfolio: sustainable index funds and ETFs. These provide broad diversification while ensuring your investments support environmental progress. The Vanguard ESG US Stock ETF, ESGV, offers exposure to large-cap U.S. companies with strong environmental, social, and governance practices. With an expense ratio of just 0.12% and a dividend yield around 1.8%, it provides steady income while supporting sustainable business practices. For international exposure, consider the iShares MSCI KLD 400 Social ETF, DSI, which has delivered strong returns while excluding companies involved in controversial activities. The fund yields approximately 1.5% and provides exposure to companies leading sustainability initiatives. The Invesco Solar ETF, TAN, focuses specifically on solar energy companies, capturing the explosive growth in renewable energy. While more volatile than broad market funds, it offers exposure to one of the fastest-growing sectors in the global economy. For fixed income, the iShares Global Green Bond ETF, BGRN, invests in bonds financing environmental projects. These green bonds fund renewable energy, energy efficiency, and sustainable infrastructure while providing steady income around 2 to 3% annually. These foundation holdings should represent 40 to 60% of your green portfolio, providing stability and broad exposure to sustainable investing themes. The combination of domestic and international exposure, along with both equity and bond components, creates a solid base for building additional green income streams. Rebalance these holdings quarterly to maintain target allocations, and reinvest dividends to compound your sustainable wealth over time. This foundation provides the stability needed to take more targeted positions in specific green sectors. The second layer focuses on individual green stocks with strong dividend growth potential. These companies combine environmental leadership with shareholder-friendly policies. Next Era Energy, NEE, is the gold standard for renewable energy dividends. This utility has increased its dividend for over 25 consecutive years while becoming America's largest renewable energy generator. The stock yields around 3% with consistent dividend growth, and the company's massive wind and solar investments position it for continued growth. Brookfield Renewable Partners, BEP, offers exposure to global renewable energy infrastructure with a distribution yield around 5%. This partnership owns hydroelectric, wind, and solar assets worldwide, providing geographic diversification and inflation protection through long-term power purchase agreements. Microsoft, MSFT, might surprise you as a green investment, but the company has committed to being carbon negative by 2030 and is investing billions in renewable energy and carbon removal technology. The dividend yield is modest at 0.7%, but the company's strong growth and environmental commitments make it a core green holding. Waste management, WM, profits from the circular economy, turning waste into energy and recyclable materials. The company yields around 1.6% with a 20-year track record of dividend increases. As sustainability regulations increase, waste management becomes increasingly valuable. Unilever, UL, represents sustainable consumer goods with ambitious environmental goals and a portfolio of eco-friendly brands. The stock yields around 3.5% and provides exposure to the growing market for sustainable consumer products. These dividend-paying green stocks should represent 20 to 30% of your portfolio, providing growing income streams while supporting companies leading environmental progress. Focus on companies with strong competitive advantages in growing sustainable markets. The third layer includes real estate investment trusts and infrastructure investments focused on sustainable properties and green infrastructure. Prologis, PLD, owns logistics real estate optimized for e-commerce and sustainable supply chains. The company has committed to net zero emissions and is installing solar panels on warehouse rooftops worldwide. The REIT yields around 2.3% with strong growth prospects from e-commerce expansion. Digital Realty Trust, DLR, owns data centers increasingly powered by renewable energy. As cloud computing grows, these facilities become critical infrastructure, and the company's commitment to renewable energy makes it a green play on digital transformation. The yield is approximately 3.2%. Brookfield Infrastructure Partners, BIP, owns essential infrastructure including renewable energy, utilities, and transportation assets. The partnership yields around 4% and provides exposure to the infrastructure investments needed for the energy transition. American Tower, AMT, owns cell towers increasingly powered by renewable energy. The company has committed to renewable energy goals and benefits from 5G deployment and digital infrastructure growth. The REIT yields around 2.1% with strong growth potential. For direct renewable energy exposure, consider the Invesco Global Clean Energy ETF, PBD, which focuses on companies involved in cleaner energy and energy efficiency. While yields vary, the fund provides targeted exposure to the energy transition. These infrastructure investments should represent 15 to 25% of your green portfolio, providing higher yields while supporting the physical infrastructure needed for sustainability transitions. Infrastructure investments often provide inflation protection through long-term contracts and essential service monopolies. The fourth layer includes alternative investments that provide diversification and exposure to emerging green sectors. Green bonds offer fixed income specifically financing environmental projects. You can buy individual green bonds from companies like Apple, which has issued bonds to finance renewable energy and energy efficiency projects. These bonds typically yield 2-4%, while directly funding sustainability initiatives. Peer-to-peer solar lending platforms like Kiva Microfunds allow you to lend money for solar installations in developing countries. While returns are modest, 2 to 5%, these investments directly support renewable energy access in underserved communities. Sustainable agriculture investments through platforms like Steward provide exposure to organic farming and sustainable food production. These investments often provide both financial returns and environmental benefits through carbon sequestration and biodiversity protection. Water rights and water infrastructure investments offer exposure to one of the world's most critical resources. The Invesco Water Resources ETF, PHO, provides exposure to companies involved in water treatment, distribution, and conservation. Carbon credit investments allow you to profit from carbon reduction projects while supporting climate action. Platforms like Nori and Pachama offer access to verified carbon credits from forestry and agricultural projects. Crowd-funded renewable energy projects through platforms like Energia allow direct investment in specific solar and wind projects. These investments often provide fixed returns, 5-8%, while supporting renewable energy development. These alternative investments should represent 10-20% of your green portfolio, providing diversification and exposure to emerging sustainability sectors. While some carry higher risks, they offer the potential for both financial and environmental returns. Now let's put it all together into a comprehensive green portfolio designed for passive income generation. A sample $100,000 green portfolio might look like this: 50% in sustainable index funds and ETFs for stability and broad exposure, 25% in dividend-paying green stocks for growing income, 15% in green REITs and infrastructure for higher yields, and 10% in alternative green investments for diversification. This allocation targets a current yield of 2.5-3.5%, with potential for dividend growth over time. As companies increase their environmental commitments and sustainability becomes more profitable, dividend growth should accelerate. Rebalancing is crucial for maintaining your green focus. Review holdings quarterly and rebalance annually, or when allocations drift more than 5% from targets. This disciplined approach ensures your portfolio maintains its environmental focus while optimizing returns. Tax efficiency matters for passive income. Hold dividend-paying stocks in taxable accounts to benefit from qualified dividend tax rates. Keep REITs and bonds in tax-advantaged accounts where their higher tax rates won't impact current income. Successful green investing requires ongoing monitoring and optimization to ensure your portfolio continues generating income while supporting environmental progress. Remember, green investing isn't about sacrificing returns for values. It's about recognizing that sustainability is becoming a competitive advantage, and the companies solving environmental challenges are often the best long-term investments. Your green portfolio can fund your retirement while funding the transition to a sustainable world. Every dividend payment represents both personal financial progress and support for companies creating positive environmental change. If this video helped you understand green investing strategies, please give it a thumbs up and subscribe to Freedomfully for more content. What green investments are you most interested in? Have you started building a sustainable portfolio? Share your experiences and questions in the comments. Until next time, keep building your freedom fully. And remember, your investments can be a powerful force for both personal wealth and positive environmental change.